All right, I think we're streaming. Hello, everyone. It is Friday, March 28th. And yeah, welcome to the Wall Street Rundown, man. My name is Billy Clement. I'm your co-host. I have my co-host with me, Wale. What's up, bro?
What's up, everyone?
Man, what happened today? Today and yesterday. So the Dow Jones dropped down today like 700 points, like down to like 1.7%. The S&P fell like damn near, I think it was down like almost 2% at one time. NASDAQ down 2.6%. That means the tech sell-off is real, y'all. Like crazy real. The inflation data came in. Oh man, I mean, we talked about this a lot, man. The PCE, the Federal Reserve Preferred Inflation Gauge, rose by 0.4% month over month and 2.8% annually, basically beating some expectation. It's not a crazy jump, but it was enough to spook some people out.
hmm
Uh, Consumer sentiments also is the lowest, man, since 2022, with this whole inflation rising and all these different things. But yeah, man, what are your thoughts, bro? Because I was like, we kind of saw some relief yesterday, with the market kind of bounce a little bit after filling that gap. But man, we went right back to sell off. And looking at those charts, it doesn't look like we're done, man. It looks like we have some more drop to go. I don't know when it's gonna happen. We might have a quick bounce here for a couple of days, but I don't think we're done yet.
So just going into this week, I was fairly positive, and I thought that we would at least dodge the tariff headline for this week, at least. But once we got to Wednesday, right, we got the 25% announcement on auto imports.
Yep,
And
yep.
once that came in, everything kind of just got chaotic again. So the from a technical standpoint, I was looking at the weekly, and last week we made a higher high and a higher low.
Yep.
And this week I was like, okay, if we can hold the above the low of last week, we've got a fighting chance. And
Hmm.
today we broke the low from last week, and
Yep.
that makes me very bearish going into the rest of next week because we're going to probably get more detail about all the tariffs that are coming in on April 2nd.
Couple seconds. Yep.
The core PCE number was what I think scared people because it was up by 0.10%. I think it was. Core PCE was a little bit hotter than people expected.
Hmm.
So what this tells me are a couple things is the Fed has no incentive to cut rates
Recover rates.
anytime soon. And what I am starting to feel is as we start to see the tariff effects show up in the data, two things are going to happen. We're either going to be stuck where we are or inflation is going to start to move higher.
Right.
But inflation is not going to move lower to me anytime soon. And our next Fed meeting is not until May. So we got May, June, July, September, October, December. We have 6 meetings left. And unless there is some sort of tariff agreement between all of these countries that are getting slapped with tariffs,
Hmm.
I'm probably going to go out on a limb and say zero rate cuts this year. Like I am teetering towards zero. The only caveat that could possibly force a rate cut this year is if unemployment gets out of control.
Yep.
That's the only thing.
Yep.
If
And you can kind of
unemployment,
you can kind of hear a little bit of chatter about it because I've seen a lot of people like hard time getting a job or
mm-hmm,
just staying out
mm-hmm,
there a lot longer, filling a
mm-hmm,
lot more applications. You know what I mean?
mm-hmm,
So it's happening slowly.
yeah. So, and then you keep hearing headlines like, judge blocks Trump's order of,
Yep.
for laying off people. Then he's like, okay, I'm going to lay these people off. And it's like, so there's a lot of back and forth as far as who's getting laid off, who's
Hmm.
going back to work, and we
Hmm.
don't have a lot of the real data. Now, I will say this in the private sector, there are companies laying off more people. I think I just saw Morgan Stanley is going to lay off about 2,000 people.
Yep.
Some for performance, some they're saying that AI is going to replace some of their roles. So if the private sector is not hiring, and the public sector people are losing jobs, that's not going to be a good combination of things coming down the pipeline.
Right.
Um, how long that starts to reflect in the jobs data, we'll have to wait and see. But I'll be 100% honest, based on what I am seeing, I am not very optimistic about the Fed being incentivized to cut rates anytime soon.
Nope.
I'm on the verge of zero now at this
Yep.
point. So
Yep. Yep. I'm right there with you too, man. I mean, I don't see one, I don't see any incentive. And two, the the way the inflation is looking right now, and this is without us getting the tariff information, the tariff numbers. You know what I mean? So it's like there's still there's still a lot of unknowns, right?
yes, yes,
And if there's any decisions that's going to be made, I think it won't be made until after we see some of the reflection of the inflation on the overall broader market and
correct.
in
Yep.
the economy. So right now, we don't have that yet. We don't have those numbers yet.
And Jerome said it's going to be really hard to figure out the direct impact of tariffs in the data.
Yep.
And based on what we've seen from the Fed isn't going to react based on maybe 1 month's worth of data. So we might have to wait another whole quarter
Yep.
before we
Yep.
start seeing the real effect of what is going on. Um, Trump came out and said that if the automakers raise prices, that they shouldn't. I mean, I don't think he has that kind of authority. I mean, they're going to have to do what they need to do for their business. But yeah, I am not very optimistic about how.
But I think we lost you, Wale. I don't know if you were there, but I think we lost you.
The
Um,
oh,
there you
I
go.
said that
You
the
back. You back now. You back now. Yep.
okay. I was saying the tariff story can flip at the stop of a dime because
Yep.
we saw how quick it flipped on Friday last week,
Yeah.
right? We
Yeah.
said there will be flexibility. Monday we gapped up. Tuesday we had a pretty good day. Then Wednesday it's 25% auto tariffs.
Yep.
Then Thursday and
We-
Friday we sell off. So if he
Yep.
comes back on Monday and says, "Hey, we have an agreement with these countries to figure out tariff policy," the market could go back
Can
up.
go back up. Yes. 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 Yes.
So it's
It,
really a day by day thing at this point.
yeah. Yeah. Because you never know. Like you really have to rely on Trump's schedule. What's going on?
Mm-hmm.
You
Mm-hmm.
have to pay attention to all the economic calendar news that's coming out because you never know
Mm-hmm.
how's that gonna affect the market. And you pretty much gotta be glued on to like TV, Twitter, X, something. You got to be glued to something because otherwise you can be in position one time and then the next thing you know, somebody says something and yeah, the market goes the other way.
Because Friday, man, Friday we were having, I think we had the same effect Friday where the market was selling off, it was selling off, it was selling off. And then midway through the day, we got that announcement about tariff relief or their
Yep.
or tariff flexibility. Next thing you know, I didn't think we were going to flip green. I thought, okay, we would go flat, but we
No, we
flipped
came
completely
back.
green.
Yeah, we came back and then we gapped up Monday.
And then we gapped up Monday.
Yeah.
So I am I am in the camp. If you're gonna ask me where this market is headed right now, going into next week, I mean, I'd be 100% honest. I would probably be on the bearish side until we get our next headline.
Yep. Yep. Yep.
Until yeah, so
I have, I don't know. I'm just looking at this. I have SPY. We're gonna go ahead and test that 549 low that we created back in what is it, March 13th.
yep,
If we break through that, I mean, we are, bro,
yeah.
we're
So
going
we've
down
had
to like 539. God, that's a long drop.
so we have 5 down weeks in the
Mhm.
last 6 weeks. We had a fairly, I'd call it flat week last week. We didn't make much progress, but if you look at where we're headed, so if we break, I think I'm with you on this one. Let me go back to SPY. Okay, yeah. If we break that 549 low from 2 weeks ago, the next level I'd be looking at is 544-ish. And if we break below 544, then there's a possibility we could go all the way down to 534.
Yep.
That's on SPY. On QQQ, the low from 2 weeks ago, 466.40. We break that low, I think we head over to 462.70. And if we break that low, we're headed possibly to 452.
Yeah. Yeah.
So, and if I go back to QQQ, we made a valiant effort above the 200 EMA this week. And we almost made it to the 200 SMA before we completely just
Yeah, we
flip
got
flopped.
beat. We got beat. It got hammered. We are well under 200 EMA now on the SPY,
Mm-hmm.
but the outlook does not look bullish to me at this moment. You know what I
No.
mean? Unless if we got some type of relief, some type of good talk from different countries and stuff.
Mm-hmm.
Yeah, I don't see how we going from here.
And if I'm not mistaken, I've been talking about this. We got GDP at the end of first quarter GDP at the end of April. So um,
Yep.
that to me, and I don't care what anybody says about the calculation of how they're calculating GDP. If that bad boy is negative,
Mm,
we are in trouble.
yep.
If we get negative GDP,
Yep.
we are in trouble.
But let's
So,
let's. I mean, I know we talked a little bit about this last week. I mean, on Wednesday when I said that like this sounds more like organized chaos. We
mm,
think there's no plan, but I really, really, really think there's a plan. I really think the market is going to go lower. I won't be surprised if we're back to like the 500s, 510s, 509s on SPY. Because if you look at the yearly, man, we do not look good at all. Like, I mean, yeah,
let
this is
me
crazy. Like, we
let
don't
me.
look good on the yearly at all.
I'm looking at RSP. Give me 1 second to look at SPY. Yeah, we got a fail two up on the yearly,
Mm-hmm. And we have
and
this motherboard on the 3 months, like completely just taking
yeah,
over
the
both sides.
yeah the technicals on SPY do not look encouraging on the higher time frames. And I keep telling myself this, and I think this week was a reminder that within a bigger trend, you can have smaller like micro trends
Yep.
for a short-term basis,
Yep.
but chances are things will revert back to
Long term.
the long-term trend. So
Yep.
we had 2 days of the market kind of, breaking out of the bigger trend, right?
Mhm.
But then everything reverted back to the longer term trend.
Yep.
So
Yep.
a reminder to me, because I thought we were going to see at least a fairly bullish move to close the week, and I was mistaken.
I mean, we were
So
there. We opened the week as green, but here we are.
yeah, and I'm looking at SPY on the quarterly. If you look at where we have a bearish 3 bar on the quarterly, and we are sitting right in the middle of a bullish fair value gap.
Yep.
And if we break below 550.28, uh, that's not going to be good
Nope.
because we're going to start a new quarter next week.
Yep. Yep.
So we start to break below this quarterly fair value gap on SPY. We are in trouble.
Yep.
Um,
Absolutely.
yeah, and we got another bearish 3 bar on QQQ.
They
And
basically
if we
have
look,
kind of like the same setup.
everybody's got the same setup. And then
Mhm.
RSP is also inside of a bullish fair value gap, and it is holding on for dear life.
That's crazy, man.
So, yeah, I don't know. To me, I'll say two things. Technicals don't look good. Economic data doesn't look good either. So My strategy probably moving forward is if we start to see any, relief or any bullish moves that isn't really supported by strong, you know, economic data or, you know, something concrete behind the tariff policy, short it.
Yeah, yeah, in the long, yeah, yeah. You might see a couple of days of relief, and then after that, it goes
Yeah,
back down again.
goes back down. So,
But yeah, we're definitely in that time now where it's like you almost have to play day by day, or wait for the market to do what it do for the first couple of days, and then see
mhm.
where we are before you actually start jumping in. But yeah, man, it does not look good. And another hack, yo, like RSP is legit a hack because RSP goes red before everybody else. It goes red or green before everybody else, and then you can kind of play it based on that. You know what I mean? So that's a legit hack if anybody like really want to pay attention to RSP and how to play it.
Give me one
Um,
quick second. I just
yep.
wanted to bring up something real quick. Now, amidst of all the chaos, you pointed out something to me today that I just wanted to take a look at. Um, Even though we had a nasty day today, Berkshire Hathaway.
Yes. Let's talk about that. Let's
Berkshire
talk about that.
Hathaway has been one of the shining lights in the amidst all the chaos. And Warren Buffett is looking like an absolute genius sitting
Genius.
on all of that cash.
Genius. Can you imagine
So,
if he would have held this time, how much money he would have lost? Like, you know what I mean? But now we know why he was selling all this time because everybody's like,
mhm.
why is Warren Buffett sitting on all this money? Why he's selling all positions? And now we know.
And if we look at the stock, um, yeah, the stock is green on the year, and the stock one, two, three, four, five, six, seven, eight, nine, 10 consecutive years in the green. The last year the stock had a down year, 2015, 10 years
Yep.
ago.
Yep. So inevitably, it might have been time to have like a down year. You know what I mean? Like, because we've been enjoying some like bullish years. You know what I mean? So there has to be a way for new money to flow into the market,
Mm-hmm.
right? And the only way new money flow into the market is if the market kind of create another low, another opportunity for people to jump in. So I think
Mm-hmm.
we are literally at that place, right? And man, I just don't know what I don't know what Buffett saw. I mean, he probably in the good circles of people or whatever. I don't know what he saw. I don't know what he understood about the coming administration because he started selling way before Trump was even elected. So he kind of saw some stuff. He first
Mm-hmm.
like, and I don't know, man. Maybe he looked at the chart and like, hey, we had a good few years of this. This is not gonna last for long. You know what I mean? So, and somebody big like Buffett selling might have actually caused other people to start selling, right?
That's true. Yeah, that
And
is
that kind of
true.
like then gonna get the ball rolling. Like, oh shoot, he's selling. He knows something.
Yeah.
Then people start selling one a little bit of time, a little bit of time, exiting the
Mm-hmm.
same position he was in. And if you start selling in one sector and that start dropping, everybody's like, oh shoot, what's happening? Something's happening. I don't know what it is, but I'm gonna follow what everybody's doing. So I honestly think that's probably what's happening. It's just like everybody's seeing all these big hedge funds are selling their positions and basically staying cash only, right? And yeah, once they start coming in, I think we'll create more higher. But I was like, I don't know when that's gonna happen, honestly.
Yeah.
Yeah.
And the thing about Buffett too that I'm starting to look at is um he's a big investor in Coca-Cola.
Mm-hmm.
And Coca-Cola is actually green on the year. And
Mm.
I actually looked at the consumer staple ETF, XLP. That sector is also green on the year. So let me pull up my sector. So I'm trying to figure out if, because I know he didn't sell all his positions, right?
Yeah.
He still owns some positions, but I'll be interested to see, where's my sectors list? Okay. I will be really interested to see if he took a more defensive position in the overall portfolio. So
Mm,
assuming he sold a lot of his growth stocks and maybe invested more in like the defensive stocks like Coca-Cola and other defensive stocks that he has in his portfolio. And also too, $320 million in treasuries, yielding about if we just say a 4% yield annually. So let me just do the math on that. 320 billion. I think we did this before.
yeah.
So that's about 12.8. Oh, Lord. That's $12.8 billion annually in interest. You divide that by four, that's about $3.2 billion in interest per month. So, what I want to see is this: is he taking the interest payments and reinvesting them? Or is that 320 billion cash pile building?
Mm,
And I really think that when they report first quarter positions next month, there's a possibility if they show that his cash pile grew, people are going to take that as a bearish indicator on the
yep.
market.
Yep.
So
Yep. We might get more sell off from that, you know?
yeah, because
This is
I'll
nuts, man.
I'll be honest with you, at 4% cash, that's not a bad place to be at in this environment.
Nope.
That's really like you're making $3.2 billion a month in accrued interest. It's not a bad
What
place to
three
be.
point it's a quarter. Three
No,
point
no,
because
no.
you're doing
Oh,
four
a quarter,
percent
a quarter,
annually.
quarter. Okay,
Yeah,
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 yeah, yeah,
yeah.
yeah. I'm sorry, Jack. 3.2 billion a quarter, not a month.
That's a
3.2
but that's still
billion
that's almost
a
$1 billion
quarter.
a month.
Yeah. So
I wouldn't
and
be
there's
mad if I make it $1 billion a month.
and no risk.
I would not be mad if I make it $1 billion a month.
So let me actually look at the other sectors and see. So XLU, another defensive sector,
Mm-hmm.
utilities, green on the year.
Mm.
XLRE, real estate, green on the year. Healthcare, green on the year. Energy, XLE, green on the year.
Mm.
What's next? Consumer staples, we went over that. That's green on the year as well. Um, this looks like a good industrials, XLBI, red on the year. XLB, flat. XLF, surprisingly green on the year. Huh. Interesting. Um, the bug ETF is actually still green on the year. Oh no, never mind. XLI is red. What was I looking at? XBI. That is the
With the builders.
no, the XBI is the biotech. That's red on the year, and it looks like that one could be headed lower as well. XRT retail, that's red because the consumers looks like they tapped out. Technology is red. Semiconductors, red. Home builders, red. Communication services, red. XLY, also red. Yeah. So if you just look at the economy from just look at the fundamental standpoint, all of the sectors in the green, with the exception of financials, are defensive,
Defensive. Yep.
which kind of tells you that overall, a lot of money is pouring into the defensive sectors, and in the growth sectors, people are pulling assets out.
Mm-hmm.
So people are playing the I guess the bearish side of the market where they're not looking for growth at this point. They're looking for
Yep.
stability, and they're looking
Stability.
for things that aren't really going to grow. So yeah, because yeah, all of the defensive sectors are in the green, and that is not necessarily a good thing. So
Mm-mm.
yeah, I am not very optimistic unless the whole tariff story basically flips again. And until then,
Well, I mean, I don't know if you see it in the last 4 hours of the market. Well, yeah, the last 4 hours, Trump actually came and said, "Hey, there might be a possibility for the auto tariff to be renegotiated." Basically,
I didn't see that.
yeah, he said deals on averting auto tariffs will come later.
Mm,
So I don't know what the heck that means. And he said Trump said he's willing to make deals on tariffs, but he also said he's going to announce tariffs on pharma. So if that's going to happen, start thinking about Eli Lilly, Pfizer, all those pharmaceutical companies that and on the stock market. They might also get some tariff on them. So I don't know what that means for them, but he said that he will be announcing tariffs on pharma soon. So yeah.
welcome to 2025.
Oh my god. That is I don't know what to call it, man. I really don't know what to call it.
Yeah. And I think, what did I say this year? Did I say that the VIX will probably never go below 15 this year?
We went right back up. We went right back up. And the way we closed today on the 4 hours, I think we're probably gonna go higher. Yeah,
That's
we closed as
unfortunate.
the inside. Yep, we closed as the inside on the 4 hours. We have a lot of like bearish I don't know, this is orders, no, bearish fair value gap all the way up to 24, 25 area over there. If we clear that, I think we're gonna go back to 29.
Oh, wow. That's not
Yeah.
good. That's not good
No.
at all.
No, 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 no.
Yeah, I probably should have checked the VIX before I did my SQQQ puts. I was probably 10 minutes too early on that trade. And I knew, how should I put it? I knew I should have waited because I'm
Mm.
looking at the VIX right now. Man, that 3-1 with the on the 4 hour with the inside hammer should have been my signal to
Yep.
get the heck out of there.
Yep. That was a perfect 2-1-2 and then 2-2 continuation. And now we basically doing the same thing again on the 4 hours. But overall, I mean, I think the market is not happy. The market is not it's not confident about what's happening, right?
No,
Nobody
it's
knows
not.
what direction. Long term, nobody knows what the direction is. Even
Mm-mm.
short term, I'll say even short term, you don't know what the hell the direction is. So everybody's kind of like trying to figure out exactly where they're gonna put the eggs in the basket. So in my opinion, and I want to get your opinion on this, I think it's probably good to be if you are not used to this type of market, I think it's better to either one stay in cash, right? We've been preaching this all the time, like don't put all your money in there yet. Maybe
Mm-mm.
release a little bit at a time. The other thing is maybe if you're not comfortable trading in this type of environment, maybe just stay either cash or possibly just buying shares, right? Because I
Mm-mm.
think long term shares is going to go up. If you can find a really good company, like a lot of companies are below the 200 EMA right now. So if you have some good companies, start buying them down. I would probably try to advise people from not trading, especially if you don't know how to trade in this atmosphere. And this kind of remind me like early on 2020, where it's like things were just like all over the place. So I want to get your opinion on that because I feel like a lot of people are lost right now. And I see a lot of people kind of complaining online. We don't know what this market is going. I'm frustrated. I'm stressed, all of that stuff.
So this is how I would I would move in this market. I would be, if I have no experience, I would still be an investor, right?
Mm-hmm.
And when I say an investor, I'm not talking about leaps. I'm talking about buying shares of companies that you can trust. And when I say you can trust, you have to think past 1 year, 2 years, 3 years, four
Right.
years. Yeah.
Right.
So I'm comfortable buying shares of good companies in this environment in very, very small increments, right? So to me, when volatility is high, because institutions are still buying, like let's just institutions are not,
Oh yeah. Oh
they
yeah.
might be selling some positions, but trust me, they're reinvesting in other positions.
Yep. Yep.
So if I have a long-term portfolio, let's say like a 401k, an IRA or something like that, one thing that I always do is, and I think I talked about this a couple shows ago, three sectors that I'm always making sure I'm invested in: large cap, right? International, and
Mm-hmm.
small cap. I would be overweight international for the time being because if we look at where a lot of the growth is located, there are in companies that are overseas in like Europe, China, and emerging markets, Brazil, and things like that.
Yep.
Those
Yep.
parts of the
Yep.
market are doing better than the US. So if I have a portfolio, a long-term portfolio, like again, like 401k, where I'm using mutual funds and things like that, I would be overweight on the international side. And I made that adjustment in my own personal portfolio maybe about a week ago, where my international allocation is a lot larger than what it used to be, roughly about 5 or 10%.
Mm-hmm.
I'm not going to stay there the entire time, but I think for now, I would tilt more towards international. Now, does that necessarily mean that I'm selling um, out of my domestic, like let's say my SPY or my S&P 500 index fund? No.
Mm-hmm.
What I probably do is the portfolio that I'm actually holding, right, where my assets are already sitting, tilt that more towards international. But as I'm making new contributions bi-weekly, I would be buying mostly domestic because I'm buying them cheaper as it's
Right.
going down.
Right.
So any new money going in to be invested on my biweekly payroll, monthly payroll, whatever your payroll schedule is, I'd be buying the S&P 500 index, maybe buying some small caps, but I'm a little bit timid about small caps, mainly because I don't expect interest rates to come down this year. They need interest rates to come down in order to start moving. So until then, I'm not really doing much small caps. So that's how I would be tilting my portfolio.
Yeah.
Especially
Right.
if I'm young, I'm not going to have fixed income in my portfolio, not at this age, no. So, um, yeah, that's what I'd be doing. So if you like the Apples, the Nvidias, the Broadcoms, all of the good high flying businesses that are doing well, I would be buyers of those stocks.
Yeah.
But I
Yeah.
would be breaking up my investments, maybe not even 10% increments, maybe even 5% increments, you know, because and I would focus on B2C companies, not B2B.
Mm-hmm.
I mean, not B2. I'd be focusing
Be,
on B2B
be,
companies,
right.
not B2C,
Right.
because I'm still seeing that the consumer overall, look at what happened to Lululemon today. Ooh,
Ooh, 12% drop today. I mean,
the consumer is not in a good place in my opinion, just looking at the data.
but I mean, it
So
makes sense, right? Like we don't have money to spend on expensive stuff. Most people probably start going to like, the Rosses and the Marshalls to get new clothes or, buy stuff on Amazon that's probably cost them like, less than what they buy Lululemon. Like, I
mhm,
mean, especially the majority of consumers, I would
yeah,
say. You know what I mean?
luxury items. I mean, they're looking real, real, real like no go. Like
Mm-mm.
so. Yeah, I mean, I don't know. I would always tell people this is, from an investor standpoint, these are the times where you position yourself to ride the wave when it turns around. Now,
Mm-hmm.
I will say that the wave is not ready to turn around just yet. So you have to be very patient, you know, and yeah, I would not be buying the market in big chunks. I would be decreasing my increments like anywhere between again 10 to 5% increments and be breaking that up because like I said, I don't see any relief any time. soon.
Nope, I don't see anything at all.
Yeah, nothing tells me that the market is ready to turn around just yet. Now, if we would have made a higher high and a higher low this week, I would have been a little bit optimistic. But since we didn't, um, I was just kind of like, yeah, that thesis is out the window now.
Yeah. The other thing that I was gonna say is um the gold actually made a new high today. We actually setting at like 3,000. I forgot what the number is, but we are high up there, right? And usually when the gold and silver start going up, people start
Yes.
loading on those on those minerals and stuff. Like I feel like I was like,
Hmm.
people started to put their money more in hard
Hard at real assets. Yep.
real asset
Real
rather than like the
assets.
stocks and stuff. So usually that's not a good thing because like they
No,
don't
not for
see
growth
any other
stocks.
yeah, they don't see any other way. So they just buy real asset and just hold it somewhere, So
Yeah.
um
The thing about GLD, so GLD is a I guess a proxy you can use
yep,
for gold. The thing that I just hate about it is it just gaps up so much
yep,
sometimes.
yep.
And I think another one is GOLD,
But the
which
GOLD, I think that's the actual one, right? That's the
that one's a little bit more choppier. That's
the
very,
bear gold. Yeah, 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 yeah,
yeah,
yeah.
that one's a little bit more choppier. I usually use GLD for gold and then SLV for silver
Mm-hmm.
as my proxies for the um and all of them are green.
Yeah.
Had a green week and got a green month.
And that's what I mean. A lot of people are putting their money into like hardcore assets that they can actually see and hold and stuff. So
Yeah,
that's a little not good for the overall sentiment of the market either. You know what I mean? So that's
no.
something you guys got to take into account is when that started happening. Yeah. Core Weave. I know we talked about this. They finally IPO today. It wasn't bad and it wasn't good. You know what I mean? It kind of like is the AI sentiments dying down or people like kind of hunkering down trying to figure out exactly what to do with AI. But it's like if you look at it, it went up as high as 41.94, and then we closed at what 39.97 or something like that. So
Yeah. So the fact that they closed below their IPO price,
yeah,
that's not good.
yeah,
That is not good. And the fact that they also were going to issue more shares and they decreased it by like $3 billion
yep,
almost.
yep,
So that's not a good sign. That
yeah.
is not a good sign. So I know this is on my list for companies to watch, but I am not a buyer of CoreWeave anytime soon.
My only
May
question is, who was the genius that said, let's go ahead and IPO in this market? You know what I mean? It's like if you would have done it like January or even like sometimes last year,
hmm
they would have. I think they would have ran. Like I think they would have really got like a lot of attention. But right now in this market, like why would you? I guess why would you IPO right now? It does, for me, it doesn't make sense.
you know what it probably is private investors who are waiting for an exit
They're
strategy.
just trying to get their money out.
They've been pumping a lot of money into the company. They're like, yo, y'all got to do something.
Yeah, yeah, yeah.
Because early investors, they make their money on a liquidity event, like an IPO or the company getting bought out by somebody else.
Right, right.
So there was probably a lot of pressure to go public, um, which is, if you're a venture capital or private equity fund and you've given this company tons of money over the last few years, you got a lot of leverage.
Mm-hmm.
So I just don't like the fact that they've got a lot of debt on their books. And again, this market is not friendly for IPOs.
Nope, nope.
No. So,
That or M&A. M&A is not a good time either. I mean, we both thought like mergers and acquisition was gonna be like this big thing for Trump being in the office. He's pro business, pro all of that. But we haven't seen.
yeah.
We're going into second quarter. We haven't seen. anybody trying to merge with anybody? We haven't even seen big news of anybody
We
trying to
we
merge with
did see
anybody.
one big one in the private market, right? We saw the Wiz deal, 32 billion by
Yes.
Google.
Yep.
So maybe the private markets will see some M&A, but in the public markets,
Mm,
we haven't seen anything like really, really big.
right.
And it also depends on what type of business you're in because we talked about Family Dollar being sold off by
Yep.
Dollar Tree for a
Yep.
$9 billion loss. You know,
Yeah. Yeah.
yeah. So Wiz probably saw an opportunity and was like, you know what?
It's now
If
or never.
Google's now or never, if Google's going to give us $32 billion for our business, sell it.
Yep. Otherwise, we gotta wait for another 10 years or before I
Mhm.
can get my money out, you know. So
Yeah.
man,
So
that's crazy. But again, we're looking at tariffs, we're looking at all this, market volatility. I think it's just it's causing people to not want to,
yeah,
get into like M&A right now. It just doesn't make
yeah,
sense.
yeah.
So
Making people nervous, making people nervous. So yeah, this is. I'll be honest with you. I will be very honest with you. This market is really going to test a lot of people's patience. It's going to test a lot of people's
yes.
patience because again, you look at the last 2 years, what we've seen. We've seen pretty strong upside moves the last 2 years.
Right. Right. Like
We
crazy, crazy, crazy move to the upside.
Yeah. So now I call it a reality check where the market is kind of like, you know what, things can go down. And anytime there's like a little bit of a glimmer of hope, like we saw Monday,
Gets
we're
taken right
just,
out.
yeah, we're reverting back to the bigger trend. So
Right.
I don't want to, I'm not in the business of making predictions, but at the pace we're going, could be a red year. We could
Yep.
see a red year. We haven't
Yep.
seen one since 2022. It could be a red year because
Oh yeah.
again, the only thing to me that will give this market life is things get really, really bad and the Fed steps in and
Mm-hmm.
cuts rates,
Mm-hmm.
or B, all of the tariff chaos that we see gets settled for good.
Right.
If those two things don't happen, this is kind of what we have to live with and expect.
Yep.
So
Yep. Absolutely. And I was gonna say the same exact thing. I was like, the only thing that can save this market is if all these countries and all this, tariff
maybe,
talk, they came and sat down like, okay, we agree on X, Y, and Z.
yeah,
Maybe instead of doing 25, 10 here, 15 here, maybe let's agree collectively on helping each other out and building each other's economy. I think that's the only time we see the market go up. Or like you said, it gets really, really bad. The Fed's like, all right, man, we gotta do something like this.
yeah, they got to do something. And
I'm going
that,
with the latter. I think
yeah,
it's gonna get real bad.
Trump wants all the other countries to bend the knee.
Yep, yep, yep.
And
Pretty
it looks
much.
like everybody's playing hardball. So
Yep.
the Fed did say, like I said, the Fed said if it gets bad, we will step in. And to me, if I were to put a level where the Fed starts to say we might need to start looking at, you know, halting the damage. 4.3% unemployment, I don't think they do anything. 4.4, I don't think they do anything. 4.5, 4.6, that will start to raise red flags where they may need to step in. So
Mm-hmm.
I don't know. I'm just we know that that's kind of like, how should I put it? That's the lifeline that the market has, but we don't know. Again, we don't know where the Fed will say, okay, enough is enough. We don't know what that level is. Powell's not going to tell us what that level is, but they're just going to keep saying that they look at, they they're going to keep looking at the data,
Right, right,
you
right.
know, and um, maybe the word transitory when he was talking about the tariff inflation, maybe that was the jinx because we know what happened last time we heard that word.
Man, I'm telling you, man, we are in a heck of a ride coming up. Hold on, somebody had a question. Somebody said,
Uh-uh.
"What is the difference between exponential and simple moving averages?" For me, simple moving average it takes all the price equally, right? All the
Yes.
price from all the, so if you get like 200 EMA, I mean 200 SMA, it literally takes all the prices from all these times, add them together, and divide it by a certain number.
Mm-hmm.
As opposed to EMA, it gives more weight to the recent prices. So it doesn't necessarily
Yes.
look at like all the 200-day moving average. You look at the most recent prices and add them together. So there's a formula for it. If you guys want, you can probably look up what the formula is, but there's a formula for it, and it will help you kind of like figure out how to calculate SMA and EMA. I know sometimes people just like putting those lines on there, but
Mm-hmm.
sometimes it's good to look at the formula. I should look at like what exactly is it calculating. That will help you out a lot to be able to
Yeah.
understand which one is which and which one to use and when. So
So the way I would look at it is the 200 SMA is like RSP. It
yep.
takes everything and it weighs everything equally over that 200 days. The EMA is kind of like SPY. You know how SPY has a big tilt towards technology because of
Yep.
the Apples and the Nvidias and the Microsoft. The EMA has that same tilt towards the most recent price action data.
Prices.
So if we are in a downturn, let's say the last 5 weeks, we're in a downturn. If you look at let me go to SPY and let me, yeah. So if you look at the SPY, the EMA is less than the SMA, mainly because the most recent days we've seen have been down.
Mm-hmm.
So, yeah, that's how I would look at it. If you want something that's a little bit unbiased as far as what has recently happened, look at the SMA.
SMA.
If you
Yep.
want something that's going to give you an idea of what's been happening over the last, call it, 2, 3 weeks of trading, look at the EMA. I put both on my charts because sometimes they almost look identical. And
Mm-hmm.
then once you start to see a deviation between the two, it will sort of give you an idea of what the most recent trend is.
Right.
So you can start to see that the EMA is a little bit is lower than the SMA on SPY, and you can kind of see the reason for that is because the most recent bias of where the market has been is
Yep.
been bearish.
Yep.
Yeah,
Yep.
very good question. Very good question. So yeah, and as long as again, it sucks. Um, but as long as we're under that level, you just have to really take any sort of bullish move with a grain of salt.
Yep.
If you're a day trader and you can catch some of those moves, like if you were able to catch Monday's gap up, that's probably a pretty good trade. But
Mm-hmm.
we basically got the gap up and then everything
We
just
came,
made
we came back, closed it,
pretty much
and
got clapped.
crashed through it. Yeah.
So
But
five,
but
go ahead.
But I was gonna say like EMA and SMA, those are really good long-term indicators that you can look at, especially as we are starting maybe like to head toward like an upshift momentum. I think we talked about this already. Start paying attention as we start moving closer to that to those lines, because they're gonna help you kind of see if we're actually doing a reversal or what's happening. You know what I mean?
Hmm.
But yeah, just keep an eye on that line for sure.
Yeah, I was gonna say SPY until we get above 576 and we're
Mhm.
able to hold above 576. That is a line in the sand where I'm saying
That is a tall order,
that's a
man.
towel. I do not know if I can trust anything above, I mean anything any bullish move below 576. And
Yeah.
the reason why I say that is if you look at the 4 hour on a technical basis, we have 1, 2, 3, 4, 5 wicks. And every wick we got clapped.
Yep.
So we almost made it above it this week and we didn't. So until
Mhm.
then, again, you got to take that with a grain of salt.
Yep.
And then another thing I was looking at that was getting a big headline. So there's a technical indicator called a death cross.
Oh yeah.
So the death cross is basically where the 50-day moving average, simple moving average,
Mm-hmm.
crosses below the 200-day simple moving average. And Nvidia made a death cross recently.
Yep. Yep.
And from a institutional buyer sentiment, that's not good.
It's terrible. I hope
Yeah.
what was it in Nvidia we're talking about? They had like somebody had like a price target of like 90
Hmm.
some dollars.
I think I saw a big order this week of 85.
I would not be surprised, man. I would
Yeah.
not be surprised. There needs to be some readjustment in the valuation, and they've been riding this AI wave, so
Yeah.
it's
Let me pull up Nvidia real
gonna be a
quick.
grim atmosphere for them. But looking
Yeah.
at this right now, they might go and test that 104 level. If they break through that shit, we're gone.
Yeah. Yeah. Nvidia made a death cross. Um, SPY has not made a death cross, so we're still good there. Has QQQ made a death cross? QQQ has not made a death cross.
Mm,
So, and I'm not saying that you can like you see a death cross and all of a sudden you trade everything bearish. I'm not saying that.
right.
But from a technical analysis, what that tells you is that the sentiment for the market, at least for where we're at now, is bearish.
Highly bearish. Yep.
And if you look at Apple, Apple looks like it's about to make a death cross. So if you got Apple and Nvidia, the two biggest holdings in the S&P making a death cross. I'm not
Yeah.
saying that SPY is going to make one as well, but that just kind of tells you that the sentiment is getting more bearish and more bearish. So,
Apple looks
you know,
ugly. Apple looks real ugly.
and if you look at where Apple got smacked today, we got rejected again at the 200 EMA.
200. That's the
200.
one, two, three. This is the fourth time.
Yeah, 200 EMA.
Mm-hmm.
So, yeah, I think Amazon is another one that made it above the EMA. Then you see the yesterday's
Nope.
price action. It kind of tried to hold it and then it just
Got
dropped.
rejected. Yep.
Yeah, it just dropped. So
Yeah,
yeah.
we're definitely at a time where the long indicators are showing us bearish movement. You know what I
Hmm.
mean? From time to time, you might see some movement up to the upside, but you guys know, like stock market doesn't move in like straight line, right? It moves up and down, and if you look at the daily chart, or if you look at the daily chart right now, you will see like it goes up, down, but you see the trajectory of it is to the downside.
Yeah.
We haven't really made any changes in the terms of like breaker structure or anything like that.
No.
And yeah,
And if you look at the monthly um on SPY, this is another thing that actually sucks. So last month we actually, which was last month was February. So we actually made
mm-hmm.
a higher high and a higher low on February compared to January. But then if you look at March, we made a lower low and a lower high.
Yep,
And we took out the lows of of February, January, December,
yep,
November,
yep,
October.
yep.
And we could be, yeah, we could be headed to
Going
the
back to
lows of September.
August. That's why I say if we break to that five, the first level is five. What is it? I said 549.
Hmm.
Yeah, because that will mark the breaking structure on the daily. If we
Hmm.
break through that, we're gonna test that wick of low of what is it, September?
Yeah.
We're gonna test that wick of that low. There is some orders on there. There seem like there's some nope, we validated already. That yeah, we validated already. So if we break to that September level, we're going to August. And you
Yeah.
guys saw that crazy drop in August. So
Yeah.
we're gonna get there. It's gonna take time, but I think we're gonna get there.
Lord
Oh
help us.
man, Lord help us for real. But hey, if you know how to trade the market, if you are patient, I'm telling you, man, you make money off of those drops. But you just gotta be very um precise with your entry and your exit, because at any given moment during the day, it might reverse and go the other way shortly, and then you'll be in a negative. So yeah, just keep an eye on that.
And my thing is if there's any place where I would be bullish, and I'm talking about long-term bullish, as far as where we could go. Two names that I like. Actually, I'll say three names that I like long term. And when I look at my long-term portfolio that I need to probably add, I still like Planeteer. I still like CrowdStrike,
Mhm.
and I still like TSMC, and I still like Palo Alto Networks. Those four are on my shopping list.
Yep.
Um, Now, when I start to make those entries and start to deploy, I am not ready yet. Um, the thing about Planetary that does make me nervous is with, I think their biggest customer is the government,
The
right?
government. Yep.
And if the government's cutting spending, that's probably going to hurt the stock. So it will be it will be really interesting to see what companies will report for first quarter 2025 earnings and what their guidance will
Mm-hmm.
be. But if there's any sector that I'm kind of locked in on that I like, I still like cybersecurity and I still like software
Absolutely.
because even though there is tariff fear, if the market trajectory starts to tilt and the tide starts to change and the sentiment starts to change and things get more bullish, to me, those two sectors don't have to worry about tariffs.
Right.
So when I look at the overall economy, tariffs are not helping the story, but we're also in a growth slowdown, right? I don't know where we're going to bottom. I don't know when we're going to bottom, but at some
Mm-hmm.
point, the tide will start to
It
turn.
was still turning. Yep.
And even when it turns, there still might be tariffs, like that still might be a headline. But if the economy is growing, to me, I still think that software will be a place I would like to be long term. So
Absolutely.
those four are on my shopping list as far as looking at places where I would like to deploy cash um, when things turn around. I like Nvidia still,
Mm-hmm.
but the problem with Nvidia is they have been in the crosshairs of the whole China, like who you can sell chips to.
Yep.
And the government is limiting what they can sell to China.
Yep.
And that's not helping their business because I'm not saying a bulk of their business is not to China, but it's part of their business.
Yep. 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 I mean,
So
if you think about it security wise, like that might be a good thing, right? For the country to not sell like
their
your
best chips,
chips,
yeah, yeah.
your best chip to your biggest enemy, possibly. You know what I mean? That might not be a good thing. So I don't think country wise, I think it's a good decision. Business wise, it's gonna impact
It's going to impact them.
Nvidia
Yeah, it's going to
crazy.
impact them. Yeah.
So yeah, but anyways, looking into next week, man, some of the economic calendar, we have the Chicago Business Barometer, PMI for March that's coming on Monday. I don't know how important that's going to be, but we shall see. We have on April 1st, we have the S&P Manufacturing PMI. We have the job openings and labor turnover survey, the JOLT survey. That's what they call them. When we
Mm-hmm.
have auto sales for March, I'm curious to see how's that gonna impact with the with the whole tariffs thing. You know what I mean? People already defaulting in car loans and all these different things. So I don't know. Then April 2nd, which is a Wednesday, we have the employment report for March. That's might be a good number to look for. And then factory orders for February. I don't know how that's gonna look like. It might be higher because I think everybody was ordering stuff before the tariffs and stuff. And then April 3rd, we have the initial jobless claim. That's something to keep an eye on. Trade deficit for February. Then Friday, we have the U.S. employment report for March. And then I don't know how important it's going to be. The University of Michigan Consumer Sentiment Index for April.
That's been getting a lot of attention lately.
Yeah. Because last time, I think, was it last month? They announced it, and it's like, I think, kind of dropped the market a little bit. So I don't
Mm-hmm.
know.
It's starting to get a lot of attention. Yeah.
Yeah. And then we have the highly anticipated Liberation Day tariff announcement. President Donald Trump is expected to announce new tariffs, including a 25% duty on imported vehicles. So I don't know how that's going to impact. I don't know what's going to happen with the market. I mean, you saw when he announced that he's going to do tariffs on auto sales and everything going to drop back. So Yeah, a lot of stuff happening next week, man. So I don't know. We'll see.
If there is a trade that I'm looking at next week, and I just pulled this chart up, you want an ugly chart?
Mm.
Pull up IWM.
Oh yeah, I saw that.
Yeah.
I'm telling you, it's gonna hit that 195, 192 that I was showing you. Those orders.
To be honest with you, I'm looking at the monthly. IWM may not see any relief until like 184, 85.
Oh my god.
So I might set up a put spread on IWM and
Yeah.
go out maybe to June or July and just ride that bad boy out
Yep.
because man, I'm
Yeah.
looking at it now and I look at where it got rejected this week. Got rejected near that 207.85
Mm-hmm.
level. And we got that bearish three bar now on the week. Yeah,
Yep.
I am
We definitely you see that 196 back from the 13th.
hmm
Yeah.
I
I
think
think
that's where, yeah, that could be the next. Oh God.
yeah.
Pray for small caps.
Yeah, if we break to 196, 196, is
Oh
it
yeah, it's in trouble.
196? Yeah.
Yeah, it's in trouble.
Eesh.
So, but yeah, I think I'm gonna if we get a bullish move Monday, I'm gonna put that spread on
Oh
there.
yeah. Oh yeah.
Yeah,
That's an easy play right there. If
yeah,
you're really patient, that just wait for maybe look at the 4 hours and see if you see, man, yeah, the forest looks ugly too. We have that bearish fair value gap there. Yeah. It's probably you're probably right. We're probably gonna have a gap up into that area and then we're gonna have a sell off. That's
yeah,
crazy.
yeah. It's
But
not looking good, not looking good. And
no.
like I said, um, in as an investor, I'm not saying don't buy stocks. I'm just saying your patience will be tested. As a trader, I
Oh
don't
yeah.
I don't know if we can sit here and have any sort of like optimism about being bullish at least for the time being.
Right.
So, and April 2nd, we'll see how ugly that gets.
Yeah. But then we have JP Morgan Chase and Wells Fargo actually releasing their earnings on April 7th. So I think
Oh,
that's gonna give us an insight into what the financial market is thinking, what
hmm,
the economy gonna look like. So
gotcha.
April 7th, that's gonna be interesting time too.
Because that'll be the start of first quarter earnings as the banks will start rolling out their earnings.
Yep.
Yeah,
Yep. And they're probably gonna set the tone for what's to
for
come.
what's to come. Yeah, so we're about to we're about to roll right into earnings season.
Oh my God. But with that being said, any last minute advice, any last minute commentary you want to provide?
Yeah, I would probably say again, as an investor, create your shopping list, be patient.
Yep.
Um, if you are dollar cost averaging into the market, maybe you start to break your entries into smaller pieces now. So let's just say you're putting in $100 a week. Maybe you want to break that down to like $50 a week.
Yep.
Um, the VIX is not letting up, even though we thought we would get a little bit relief. But
Nope.
yeah, right now we just have to ride the bigger trend right now. And
Yep.
the bigger trend is bearish, even though we get, some divergence from that from time to time, but it seems that we continue to revert back to that bigger trend.
Mm-hmm.
So,
Mm-hmm.
which sucks if you're a bull and everybody likes stocks to go up, but I guess we're getting a reminder that we're still not out of the woods. So
We are not out of the woods anytime soon.
patience, patience, patience is going to be your friend.
Yeah. Well, all right, y'all. That's all we have for you all. Wednesday we might or we might not be here. We will keep you
Keep you posted.
updated. Yep. While they gotta go to South Africa, go
Yeah.
go
So
go learn some what are they speaking so dang I forgot. Anyway, go learn some South African language over there, man. Come back and say yebo and all that stuff. So
yeah, if the schedule permits, we'll be here Wednesday. If not, then we'll have to catch you guys
yes, sir.
either maybe not even Friday, maybe
All
the
right.
week after that. So
The
we'll
week
see.
after, yeah, yeah,
We'll
yeah.
see. So
But safe travel, bro.
thank
And
you.
yeah, yeah. Have a good weekend. We'll talk to you guys sometimes next week or the